Hey guys, how are you?
Fine, and you? How are
Good,
you,
good.
Patrick?
Good, thanks. Gabriel, it's good to see you again, man.
It's really good to see you again, Patrick. And I watch every time your podcast, and I was hoping to come here again, and now I am.
Yeah, well, to fill listeners in, we recorded an episode on Susano, I don't know, the beginning of the year, and we had planned to
Uh-huh.
do an episode on Minerva, but there was a huge transaction, one of the biggest transactions in Brazil's beef industry history, but it hadn't been approved by regulators yet. So the transaction was announced August of 2023, and here we are in September of 2024, and it's been recommended they're going to approve it. So we're going to talk about Brazil's beef industry and Minerva and Marfrig. But before we do, Luis hasn't been on before. So, Luis, do you want to introduce yourself? Maybe tell us a little bit more about the new company you guys are working at, Options and Co.
Okay, hi. It's a pleasure to be here with you. My name is Luis. I work here with Gabriel. We are developing an independent research firm here in Rio de Janeiro, Brazil, and our main knowledge is about options and equity derivatives as well. So just like I was told you before we start on live, we have like a full environment here. We have like a trading desk that keeps all day long with our clients, suggesting and giving like trading ideas suggestions. We have here also another area that gives like price. We have a treasury desk here too that we can market maker the options that we trade. And me and Gabriel, we are in the front area from research. When we analyze the firms, we analyze the whole scenario and the fundamental of these companies. And now, for a while, we are just looking for the EBX 15. That's like the 50 biggest firms here in Brazil. And we analyze that firms, and we also analyze the option scenario of that firm. So we calculate and plot the volatility scales, the volatility surface, and about that we make like a conversation, a mix of information to see what the best trading ideas that we can suggest to our clients. So like we believe that given a determined scenario, we can select these firms and also combining with the options details, like I said, in the volatility, the surface, the Greeks, and all the things that we analyze in options, we give suggestions to our clients. Our main knowledge, our main goal here is to explore and give like the market participations here in Brazil knowledge and demysticate the options here in Brazil. It's like a really bad assets products exploited here in Brazil. So we believe we can surf this wave and we can help the market develop.
Yeah, so it's not a common asset class, right? In Brazil, most Brazilian investors
No,
aren't options
it's
investors,
like
right?
a really small market here in Brazil. Like when we talk about derivatives, we think about millions and billions of volume, daily volume. Here in Brazil, we have some stocks that are most tradable, like the biggest one, like Petrobras, Vale, and the biggest. But it's really the number of stocks that you can trade. It's small, but the worst part of that, it's like especially personal individuals, they are like afraid. They don't have the knowledge, the basic knowledge about this scenario, and they think like options are really binary, and it's
Mm.
not. So we believe I'm gonna talk later about my knowledge, my background, but I have worked with options for a while. The CEO here also have worked in some of the main trading option trading desks here in Brazil, attending and trading for the main players in the markets. So we believe we can demysticate these markets here in Brazil, and for who knows who trades these markets, you can know that it's really profitable.
Mm.
So you can like create
Is-
a lot and a lot of strategies for your clients, for your own portfolio to benefit from options. It's not like just, I'm gonna put all my money in this bag and or I'm gonna double, triple it, or I'm gonna lose everything. So our main goal here is to demystify these markets, try to improve it, and make it bigger because we can explore here in Brazil.
Last time Gabriel and I spoke, we planned this episode. So maybe this episode we'll use to plan the next one, and we can do a full hour on equity derivatives in Brazil, and we can talk more in depth about the market. But yeah, definitely. But for now, let's do beef because I've been excited for this episode, and I'm interested in the company. I love these industries that international investors that listen and follow my newsletter don't really realize how important like Brazil and South America are in certain industries. And like South America is 40% of the world's beef exports. So it's a huge industry. And the Marfrig Minerva transaction, which was 1.5 billion US dollars, is a really big transaction for Brazil in general. So it's a big industry with a big transaction that impacts, global markets, right? Everyone eats beef. So maybe do you guys want to give an overview just of the industry in Brazil? What is going on with Brazil's beef market? How big is it? Who are the players? Whatever you guys want to talk about.
Yeah. So the first, let's take the data, okay? So, and the main source of data here in Brazil and the world is the USDA, the United States Department of Agriculture. So when you look for the Brazil and how big we are, Brazil we can take the meat markets about the cattle and the meat production. So if we take like the number of livestock production, cattle as well, you can see that the biggest country who produce cattle is India, and makes a lot of sense because they have this cultural aspect, but they do not are the biggest consumers because again it's about culture. And China is in the second place, and Brazil is the third with 16.2% of the world cattle production, and we're talking about livestock. But we came here with meat in poultry and meat in beef in veal, we see that United States is the biggest producer in the world with 20% of the market share, but Brazil has 18% of this market share, 18.7. So we are really close to the United States about the production of meat. And if you see about the exports, Brazil has 25.5% of the world exports of meat, beef, and veal, according to USDA. It means that we are the biggest exports in the world. We are the second biggest producer. This is good because we have some competitive advantage here in Brazil, mostly because our land is really good to create anything like plants and animals, and because we have this culture in South America. We have this culture to eat meat, okay? In Asia, for example, they do not have this culture. They eat more pork. And if you see, the swine is the biggest meat in the world at the major consumption in the world. So this leads us to two things. One, we have a great tendency to increase the consumption of meat in the world, okay? Because the meat consumption is associated with wealth. That means that wealthier the country is, wealthier the population is, more they will gonna eat more meat. And in the Orient, for example, they like to take some cultural things from the West, okay, like coffee, like meat, and this is associated with wealth. So in China, for example, they are drink more coffee. It's really common around there drinking coffee with Starbucks and etc. And this also is valid to meat. Okay, so wealthier the Chinese, the people from Philippines and Hong Kong, Taiwan, they're gonna eat more meat. And I have this data too. In Brazil, eat at average 30 kilos of meat per person per year in Brazil. In China, this average is only 3 kilos per person per year. That means that the Brazilians eat 10 times more meat than the Chinese. And as you know, India, Chinese, the people from the Orient are increasing and getting wealthier. So we can see this tendency. And as Brazil is the biggest market, biggest export, we are ahead of this. I think that we have to take some caution with this because we talk about cultural changes. So we have to take careful about this because it's not too obvious. Okay, we can see they eating more meat, but it's not guaranteed. And what does Minerva do about it? They not only produce meat by now, they now producing ships that in Australia, for example, because it's another kind ships. No, sorry, lambs, because there is another type of meat and it's more value aggregated. So the companies now in Brazil, the major three are Marfrig, JBS, and Minerva, and they kind of diversifying now their business because you cannot take from guarantee that people from other side of the world are gonna eat more meat. You have to make other lines of business to profit. So this is kind of our outlook here in Brazil.
Luis, what do you think? Anything to add?
No, yeah, just adding to Gabriel commentary. It's fun. It's curious to think about like US is the biggest producer in the entire world, worldwide, but it's also the second country that most imports from Brazil, just losing to China. Yeah.
So that's why Brazil exports so much, right? The US consumes
Yeah,
what they
because
produce. In fact, they consume more than they produce.
yeah, exactly. Totally. Yeah, and thinking about US, they produce a lot of red meat. They
Yeah.
like a lot of beef.
Yeah.
You know that.
Yeah.
Yeah. So it's curious that, but the most consumer from Brazilian meat it's China, followed by United States, and then followed by European Union. And it's fun because like United States consumes a lot, but they also produce a lot. But China consumptions from Brazil, it's like 9 times United States. So they
Yeah.
consume a lot from Brazil. That's why when we see on the news, China stopped is importing from any company in Brazil, from any area from Brazil, it impacts deeply the stock price here because
Yeah.
it's a full point of revenue generation from the company, especially from Minerva.
Yeah.
Minerva imports a lot for that,
Yeah.
exports for that. But talking about US, it's curious because JBS, né, here we call JBS, but GBS and Marfrig, they have more operational sites on United States. JBS have like one of the main areas on the United States. So when we think about the US market keeping in a contraction phase, I believe we are going to explore that later. It will be good for these companies. And one of the main insights of beef trying to acquiring Marfrig was trying to enter in the US market. So this is a good point of view also. But this is one of the things that we may think when we analyze the whole sector. In which phase of the cycle the market is, and it's like the magic. It would be great if we could just predict when the cycle will revert, when we will peak. Then we can make our counts, our valuation approach even easier and more precise. But it's not so easy to do. A good insight that I can give for people who is thinking about analyzing a protein stock is thinking about the average EBITDA of the cycle. So when we analyze the EBITDA of the cycle, we take the mid cycle. So when we see that the current EBITDA is below the mid cycle average, probably you have more risk reward to create a position and benefit from that, because we expect that we will convert for the mean, or even pass this mean. So it's one of the easiest forms to think about giving evaluation for a protein stock. So it's thinking about the EBITDA and the average of the mid-cycle EBITDA. It's one of the hints that I give for our followers here.
That's a perfect segue, because the last time Gabriel and I spoke and we were planning this, 6 months ago, he mentioned that he wanted to talk about the cattle cycle. And, so can you tell me what is the cattle cycle? Tell me a little more about that. It's interesting. So who people that don't know what it is.
Start from here. You can start. Go.
So the cattle cycle is really simple because we're talking about living beings. So we talk about cattle, and we have the males and the females. So as all the commodities, as all the other commodities product, they have cycles. So and they have a time the living commodity first, the agricultural commodities, for example, like soybeans and cattle and corn, they have a time to develop. So in plants, it's easier because it's only a year, for suppose. But in cattle, we have this, we need the male and the female to give the baby cattle. Okay, it's easier to talk about that. And so it's much like demand and supply. So if we have more cattle being slaughtered, we have oversupply. So the price will go down. And again, if we have less cattle being slaughtered, we have the price goes up. So, but there is a catch, because you can take a lot of parts of the cattle cycle of life, because they are born, they grow up a little bit, and they go to fatten. So they go to the fields and eat a lot, and when they get fat enough, now they go slaughter. So we have this intermediate cycle of life, that when you have to fatten the cattle, and because when you have too much of the baby cattle, as we can say, they call calves. Yeah, the word is called. When you have a lot of calves, you will have an oversupply ahead. So what the producers do, they hold the females to procreate more calves, and only the males are slaughtered. So again, we have a short supply of the cattle, because you are holding part of your cattle. We can think that the males and females cattle is about 50-50. So when you hold the females and only goes the males, you tight your supply. So the price goes up. And this price, like over and over, it's supply and demand, and they tend to last 4 years. 2 years of oversupply and 2 years of over demand. It's kind of clear. And what we are seeing, what we was expecting is that the cycle now in Brazil, we have an oversupply of cattle. So you can see the prices, mostly at supermarkets. Meat in Brazil is really cheap. We saw, for example, at the pandemics. It's really cheap, and people can eat more meat. We cannot eat other stuff because of the dry in Brazil, but meat is guaranteed. But we are supposed to be in the end of the cycle this year and in beginning of 2025, because when you take the IBGE, is our USDA, is our Department of Statistics in Brazil, we see that we have more females being slaughtered. So we can see that tendency to the producers thinking, okay, the price is too low, so we have to hold our demand. They were slaughtering the females. So the price is too. Sorry, it's kind of confused. The price is too low, so we're gonna just slaughter the females, because it's not worth to produce more and more cattle. So we can see the rise of the females increases to be slaughtered. And what can we see now? The prices, if you take the BGI index, is that our price of cattle in Brazil, they are rising and rising. They kind of above the average, the historical average, but they are rising and rising. So they're under, sorry, they are under the average, but it keeps rising and rising. And it's kind of obvious for the most analysts that in the end of 2024 and the beginning of 2025, the cycle will turn, and now the meat's becoming more expensive in Brazil, and we are hoping that. But in this week, we saw an article at Agribiz, is a journal here in Brazil. They interviewed the CFO of Minerva, Edson Chico, and they say that next year the price is gonna be still low, and because he talked about I forgot the this thing is DDG. DDG is drill distillate grain. It's like when you're going to produce ethanol, for example, from corn. In US you do that a lot. You smash the grain and ferment it, and it creates ethanol. The waste, the rest, that is this dried grain, is much rich in protein. And they're using that now in Brazil. They use it to soybean years ago, but now use it more corn and it's grain in general. They're using it now because it has more protein. And because it has more protein, they can make this cycle last. So we are seeing that Minerva, they had their own data. They have the better data than everyone in the market because they are selling. They say that next year they can make these things happen, that the price keep low, keep under the average. And this is interesting because all the proteins companies in Brazil mostly and in all around the world, they call themselves a trading company because they do not create, they do not produce and raise the cattle. They only buy the cattle and slaughter to process them and sell the meat. So they have to buy the cheaper as possible to sell the expensive as possible. So the margins are really low. It's really common. You see margins under 10%, the margin EBITDA under 10% in this market. So when you are above this market, it's a big win. Marfrig Minerva, we can see better margin to next year because of that, because they are expecting to the cycle keeps low, but in my opinion, the price keep going up. So I'm going to trust a little bit on them because we have to review all this data because of this. It's really recent, this article, this interview of Edson Chico, but it's really interesting because we are using technology, high level technology here in Brazil in our agriculture business. And we are also seeing this here because we're talking about genetics and we're talking about something that would be the waste of industry, that is dry grain, to use as input for other industries. So as I said to you the last time, it's really common here in Brazil. We develop those technology and to make the things more sustainable. So we are seeing a kind of shift, and we are in. If Minerva is right, we can see a new turn point in industry. There is a lot of new level that you can make the meat more cheaper, and people can eat more meat, and the companies can expand their margins. So these are really interesting times to be alive to see that.
Interesting. Please, anything Gabriel missed or you want to add?
Yeah. I just try to combine a few factors like macroeconomics, microeconomics here in Brazil, and also the protein sector. Talking about the worldwide protein consumption, we see we told earlier, China is the biggest importer from Brazil beef, and even when you talk about market economics from China, that we see they have a lot of issues. They are not growing. The GDP over there is not pacing quicker like the couple of decades. It's not growing so faster. Talking especially about protein consumption, the market believes that China is under the expected consumption per person. It's like everybody knows, it's a country that has a lot and a lot of people, but even they are growing and starting to consume more and more beef. So talking about Brazil protein stocks, this problem you benefit them, because if they import even more, they have, and talking about the consumption from protein stocks here in Brazil, the margins when they export for a logical reason, it's higher than from local consumption. That's obvious. So companies like Minerva that have a China consumption that's growing, we companies like JBS or Marfrig that have consumptions in US, they will benefit from that. And talking about from the, for example, US, we believe it's already in the contraction phase, like Gabriel told, because it's like turning the cycle. We can talk about the monetary cycle. That's probably next week. It's going to start the easy monetary cycle. They're going to start lowering the yields. But talking about protein consumption, we can see that the local farmers in US, they are starting to hold the slaughter, because they don't have, like Gabriel told, we don't have like cattle ready to slaughter. So they are starting to rebound. They have to prepare the herds to create them and then start to slaughtering again. So from a Brazilian stocks point of view, this is good, because US is starting to just trying to combine everything in the same box. In the US, now that we are easing the cycle, probably the consumption, the inflation is already considering to be cooling down. So that's why they are easing the cycle. And probably the consumption of beef, especially the good part of the meat, it's gonna keep hot. They are gonna keep consuming, and probably the local farmers will not be able to supply it. So from a Brazilian stocks point of view, this is good, because we can even export more to China if they keep increasing their consumption, and we also can improve our exporter to US, like we said, Marfrig and JBS. This is good for companies in Brazil. And like in Brazil, talking about the monetary cycle, we are like in the wrong way from the rest of the world. Inflation, it's anchored. The problem, we do not know what's the exact expectations for 2025. And we believe if it is inflation going up, like people here in Brazil that nowadays are able to consume meat or beef, they will start to consume another kinds, poorer parts of the cattle. And this is also will incentivize to export and growing margins. This is a good thing for us to know. And a good question about that is how long this contraction phase of the cycle will endure. We cannot know, but talking about here in Brazil, another point that will probably make the prices going up. We have like a lot of burns going here in Brazil. The air is
the wildfires, right? It's a lot of
the fire, everything is burning. You probably saw like the air here is very bad.
Yeah, we talked before we got on. It's actually, you can feel the air is terrible in Sao Paulo right now, and it's all over the continent. I've seen videos in like Paraguay of the smoke
in the north part of Brazil is even worse. Like in Brasilia, Gabriel it's kind of from there. It's people are not like breathing.
You cannot live. You cannot live.
Yeah, you know.
You have to use masks.
Yeah, and then you go to a place that's like people living a more natural, close to the nature, like Amazonas, the north part of the country. is really, really bad. And thinking about that, here in Brazil, in normal environment, we have a really good environment to create and develop cattle.
Yep.
Like the weather is good. We have like a lot of places and brownfields to leave the cattle over there. But here now, talking about the pasture drought will may impact the future cycle. May some cattles will die from the drying, you know, and this problem will impact the revenue and how companies will protect their revenue, increasing price, because the supply will also cooler, you know. So this is some point of views that combining US, China, macroeconomic from worldwide that it's starting an easy monetary cycle. It's a real point of view to think about the future of these companies, like for 2025, 2026.
Yeah, I think the fundamental case, if you zoom out and you take like a 5 to 10 year perspective on Brazil's beef industry, right? The China consumption story is real. And I don't know what other country in the world is going to meet that demand, right? Like who else? The Philippines, can they?
The Philippines, and it's kind of surprised because the Philippines, the 2 years from now, they are becoming the top 3, 4, 5 country that imports Brazil agriculture.
Chile also consumes.
Yeah, such as soybeans and meat. Philippines, it was the fifth biggest revenue, fifth biggest revenue to Minerva, and in the second part of 2024. So we can see China pulling down.
That's another big okay, but who else? Like, what other country could possibly produce to compete? Like, who's Brazil's competitors to meet this growing demand?
Argentina.
So yeah, but I mean, I'm so skeptical. Like maybe in 5 years, but I go to the same butcher at a feira in Sao Paulo, and he's been in the business for 40 years, and he stopped taking Argentinian beef like 2 years ago, and he hasn't brought it back because he goes, sometimes you open it, there's no quality controls. He goes, sometimes I have to just throw it away. So I don't know. And Brazil's so professional and so good that I don't know. Maybe Argentina can get their act together, but it seems like they're a long way away.
And just for you to see, Patrick, it's a kind of question here in Brazil to export the beef, because the countries, when they gonna import meat from Brazil, they have to qualify the mill. They first qualify the country, and later they qualify the mill. So when you say we export to China, it's only the same mills that export to China. They can demand more, okay, but it's the only. I think in March they enable 34 more mills. And for example, Brazil does not sell to Japan. Japan does not buy meat from Brazil, but they buy from Colombia. And Minerva bought the milk from Colombia that sells to Japan. So you can diversify buying other mills. And that's much like one of the reasons why the deal with Marfrig and Minerva, we're going to talk about that later. But we can see that as a kind of geopolitical and sanitary question, because Argentina, they produce more Angus cattle. In Brazil, we only produce, it's too strong, but we produce more Nelore cattle, and is our type here. And Nelore is more resistant to the climate change. They prefer the hot in Brazil, and we do not create the cattle. We create them free in the can, running the fields. In US, you have to confine them. So it's more expensive because you have the light cost, you have the food cost to the cattle. In Brazil, they eat grass and use it in desolate grain. So it's really cheap to produce cattle in Brazil, but we have those sanitary questions. So we make a good meat, but not all the countries in the world that see that. So we have this issue too.
Interesting. So yeah, let's get into Minerva and Marfrig then. So the transaction, it sounds like, Marfrig sold their Brazilian assets and a couple Uruguayan slaughterhouses to Minerva. So it seems like Minerva was making a clear bet on Brazil's industry, and Marfrig wanted to diversify and divest, and they wanted to bet on the U.S. industry. Is that fair?
Yeah. we can say that, but we can also say that Marfrig, the owner of Marfrig is Marcos Molina, and he's a big businessman here in Brazil. And they bought BRF a few years ago, and they were a lot of leverage in the Marfrig because of that deal, because BRF was kind of struggling with the financial. So one of the reasons also is they're gonna receive 6.5 billion reais, but they already received 1.5 billion in check when they announced the transaction. So the Marfrig already paid BRF, and the BRF could make a turnaround this year. You can see that their stocks like 100% up this year, BRF, and they are inside of Marfrig's. So one of the reasons also that they would like to focus on US for sure, but they was trying to save BRF, and it seems that it done right. It done good.
Okay, interesting. They needed to delever, so they needed cash.
Yeah.
And talking about it, the Marfrig assumption, like Gabriel said, it's about leveraging the company.
Okay.
Exactly. But they saw like they just don't see like priority the operation here in Brazil. They indeed believes more in the operation in the US. And from a Minerva point of view, it's a really risk move, because they bought a company that if you look right now, Marfrig values like 3 times the Minerva.
Yeah.
So they who is now leveraged? It's Minerva.
Yeah.
They just changed the both.
I'll ask you about like the price stuff too, because there's been, we'll talk about price of the two stocks in a minute. But first then, so what did Minerva end up with? I mean, what is Minerva's business now? What are their competitive advantages if they have any? Tell us about Minerva in general.
Like you said, they bought not just Brazil, but some plants in South America. They had like a real issue, I believe, in Paraguay that they did not accept the acquiring from Minerva on Marfrig plants. But talking about a point of view, the assumption from Minerva is to increase their share here in Brazil. Perfect. But they can even attain these, like we said, like the China increase in consumption. They probably have like more fields, more plants to attempt that demand. So it's a thing. But thinking about the advantages, I believe for Marfrig was good because they made their balance sheet healthy. It's better right now. They like told a part of their company that they just did not want more, a price that's totally discussable. And just giving a spoiler about the price, let's make a head count here. For example, Minerva believes that these 16 plants combined will generate about, for 2025, 1 billion reais. Marfrig believes the best scenario is 700, the half, the 700.5 million.
750. Yeah,
750. Sorry, 750 million. Yeah, so it's the half. It's a half. And thinking about nowadays, Minerva with these acquiring from Marfrig, it's about 4 times leverage. And if Minerva assumptions is confirmed, they will like maintain this leverage, but they will be able to generate a free cash flow about double digits, I believe 11. That's really good for the sector, but it's hard to believe that will be confirmed because they have to input a lot of working capital. These plants demand a lot of capital needs. They will have to invest more. They paid like 7.5 billion for these 16 plants. It's a lot of money. And if they scenario is confirmed, they bought like 5 times, not net revenue, EBITDA. And if you think about that, it's risk. The balance sheet right now is not healthy. It's 4 times leverage, net debt, EBITDA. It's not good. So it's something that we may point out. If you talk about, we can go deeper, but talking about the main protein stocks here in Brazil, JBS, Marfrig, BRF, and Minerva, probably is the one that you have the most return to capture. Okay, but also it's totally the most riskier.
Yeah.
That's
Interesting
very
though.
premise from-
When I look at just let's talk about some of the options then, because when I look at the two charts, right, Marfrig is clearly outperformed post the acquisition announcement, right? They're straight up,
Yeah.
and Minerva's kind of lagged. But given what you're telling me about, how risky and binary it is, it doesn't seem like Minerva's been that volatile. It seems like it's kind of just been trading in the same range. It hasn't done much.
Yeah, it's sideways. It's sideways.
Yeah.
Don't have a trigger. The company suffered a lot. The stock performance is really bad for like the year to date. If I'm not wrong, we can check later, but I believe year to date, Marfrig is like 90% up, and Minerva is about 30% down. So if you made like a simple acquiring trades, buying the acquired firm and selling the buyer firm, we'd have done a really good trade. But Marfrig made, like we were saying, and this reflects in the performance of the stock. Like if you believe that Marfrig don't have more an operation that was not so good for them, and their balance sheet healthier, the opposite occurred to Minerva. So
Yeah, I have the
they bought
numbers here.
something.
So
They bought something like really expensive. They will probably have to put more money to create a synergy in these plants. So the market is waiting. Probably we can see like
it's been
for
pretty
the
clear,
next-
right? I look at it right now. So year-to-date returns in Brazilian reais, Marfrig is up 48% and Minerva is down 8%, roughly. So it's a
Yeah.
pretty big divergence.
And
So then how does the cattle cycle impact then though? Like, because you were explaining that you think that the US production, which Marfrig is now more invested in, is coming to a slowdown and Brazil has a more favorable cattle cycle, right? So would you expect then there to be a divergence where Marfrig comes back down and Minerva catches up, or no? Is this more about leverage and balance sheet?
I
actually,
think it's more about the balance sheet.
Yeah. Okay.
and just adding one thing, the Minerva Marfrig deals has a point that none of the companies can say they can open the numbers of the mills because the mills are operating,
Yep.
and according to Minerva, they are not so good. They can make more. They can produce more revenue and EBITDA, as we say. But we don't know. As investors,
Yep.
we don't know, and Minerva cannot say. And like Marfrig and Minerva are historical rivals. They
Yep.
kind of hate each other in
Sure.
this business. It's really family business here in Brazil. It's kind of issue. So as we say, according to Marfrig is 7,500 million of reais as EBITDA, and so according to Minerva is 1.5 billion. So it's really huge, the difference, and became a narrative game. But now everyone is waiting for the antitrust organ to approve their acquiring. We never expected that it would be approved in Brazil about 6 months, and this was last August. We have 13 months right now.
Yep.
So as the time is passing, by, the cycle is going to turn as well. So the investors are also waiting because the great window to operate the business, the deal was 2024, but it hasn't been approved until now. So everyone is just waiting and hitting. According to Minerva, they expect next year would be better. It would be keep the prices down. But anyone is buying that speech, okay? So what the scenario? If the prediction is confirmed, we can see the cycle reverse next year and the price goes up in Brazil. That reduce the margins. And is that the moment when Minerva has the highest point of leverage? Because it's when the antitrust organs, here in Brazil we call CADE, they gonna approve. So they gonna have this big bomb in hands to the leverage in the bad market. So this is the biggest threat of this thesis. So many people expecting that they can. Another point is before the acquisition, Minerva was known as a dividend payer in Brazil. In Brazil, dividend is not taxed. You do not pay taxes in Brazil with your
Use it to be,
dividends.
right?
Yeah. So after they bought, they announced the acquiring, they said, okay, we won't pay dividends until this is done, until we set up our home. And everyone said, well, I was buying Minerva because I wanted dividends. Now you won't pay, so I will go away.
Okay.
So you can see
Yeah.
they went down 50%. They were 13 reais, now they are 7. And when everyone flew away, it now sideways because everyone, as we said, is waiting for the decisions. The cattle is the time the time goes by, so everyone is waiting right now. And Marfrig went done good because they focus on US. The deal for the market went better to Marfrig by now because they had the money, they has the reciprocal, and they are really good. They are performing well as JBS. So Minerva just had bad luck to buy a Porsche when you have a hurricane. It's like that.
Yeah.
I don't know if it's like bad luck, right? It's like
Yeah.
a bad choice.
A bad choice.
Yeah, well,
but
if
it's
the regulator too, right? The timing was kind of out of their control too, because the regulator could have approved it in a month, and it's been 13.
Yeah.
So
exactly,
that was bad luck.
exactly. Yeah, but just adding to your comments, Patrick, from US and Marfrig, we told like the local farmers are cooling down from the slaughtering part. So we believe that JBS and Marfrig will benefit from that because they will increase their share in the beef US consumption. Okay,
Yeah.
so it's not bad for them. We believe that JBS and Marfrig will benefit from this scenario, from the contraction phase in the US local farms, and this will probably increase their margins, their revenues. So we believe that the next part of the cycle will benefit these two companies. Talking about Minerva, like I told, in my personal opinion, it's like a binary situation. It's like riskier than each case, than even the other cases. But you can, if you wanna say like in which of these four companies you can like bet that may increase double in the next year. I don't believe JBS will increase that much. I don't believe Marfrig will increase that much. BRF, I believe in the momentum area from the markets is the one surfing the best part because poultry is in a really good moment. But it's risky too because the same way that the poultry cycle increases really quickly, I believe that when the turndown comes, we can turn really fast too. So now the next earnings results from BRF, they gave the market like the best EBITDA of their history. So we believe when the cycle turns down, we who believes in the long term of this the long term for BRF, we may suffer a little bit.
Interesting. So let's wrap up on this then. Let's talk about the options market for Marfrig and Minerva, or maybe in general too. Is there anything you see in other instruments? Has there been a mergers arbitrage? Has anyone been playing that strategy? Are there options even available on both these companies in Brazil?
Okay.
So what
For example, talking about Marfrig, the company went up. So talking about a simple strategy, someone who is like thinking about the long term, in the short term, the company may increase their profitability, they may increase their margins, their EBITDA, but I don't believe it will give like another boost like the year-to-date performance. So you can make like some strategies to benefit, to profit your position in the stock. For example, you can make covered calls. It's a simple strategy that you may do because the volatility it's fine. You can take a good premium about it and maintain your position in the paper in the stock in some until determined price of the company. But the volatility scenario from Marfrig is not favorable to play right now because volatility is low. So you may someone who is aiming to play volatility, to trade volatility, it's opportunistic because the volatility is low. It's like one standard deviation and a half from its historical average. So it's tradable. And thinking about Minerva, I don't like thinking about. We are talking in our point of analyzing some company with options. We do the fundamental of the company, so it's thinking this will may increase or will decrease the prices, but we also analyze the options. So combining these to Minerva, we think we really do not know what to expect to Minerva, and thinking like the stock is down in the year, but like we said, it's playing on the sides right now. It's not very volatile, so maybe a good time to buy volatility because you don't know what to expect. The volatility it's kind of cooling down, and another possibility to trade with the options. Someone who wants to play the game may buy something like for the upsides. You can like thinking about financing it with something of like a call spread. It will be cheaper than just buying simple call, you know. But the scenario for both are that the volatility is kind of low, it's cooling down, but the scenario for the companies don't seem like they will vary a lot in the short term. So we think like the best scenarios, thinking about the options point of view, is buying volatility for both.
Interesting. Gabriel, what do you think? Anything else?
Yeah, no, I also agree. Just for I was searching here in our database, and in the beginning of August, we saw people making a short straddle on Minerva because, as we said, because the stocks was it's still sideways. You can buy the sideways also when
You win. You win when volatility spikes. You win either way, right? Or you should if it's properly structured.
Yeah, when you do short straddle, you are betting that the price of the
volatility is cooling down. You are betting against the volatility, right?
Yeah, you are betting that the price will not change too much. So you receive a premium to bet that okay, Minerva will remain at the R$7. So and the person who did that will receive a great money because you receive the premium when you do the operation, and at the end, if you're not if everything went well, you keep your price. So when the option when the option is shoot sideways, you can see those operations when you just bet on the subject. As we said, is a really binary case, so it's kind of dangerous. You bet on the sideways of Minerva. For example, going to another industry, Ambev is too big. It's a too big company that you are not expecting them to grow 100% and down 50% if there is not fraud. So you expect that the Ambev stocks go to sideways. So you can do these operations, you can profit on this operation with Ambev and receive a great premium. But with Minerva, it's kind of risky because the antitrust organs can qualify tomorrow, can qualify today the deal, and the papers go up, and you will be in really bad form if this happens and you bet it on sideways. So as we said, it's a time if you if you want to play the game, to buy volatility
Yeah.
because now it's cheap. They are really
But
So if
talking
if
about
it's
just finishing about Minerva, Gabriel told like someone just sold a straddle in the beginning of August. It was making sense because in that time the volatility was kind of higher than it's now, had a little peak. So probably this person who made this trade this strategy was believing that this spike of the volatility was not normal and he was trading that. So until now it's working because the volatility is cooling down.
interesting, but longer term, you'd probably want to be long volatility on Minerva rather than
Yeah,
short it because it's
yeah,
binary. So
definitely.
you'd rather buy a long straddle than short it because
Yeah,
if the acquisition doesn't work out, it's going down probably a lot faster than the volatility's been.
yeah.
If it works
yeah.
out, they could, like you said, potentially go up more than the competitors. Interesting
Definitely.
stuff, guys. This was awesome. I knew it would be. So before we wrap up, why don't you tell everyone where they can find you guys on LinkedIn, Twitter, wherever you guys are posting content. Tell them more the site. Where should we send them?
You can go
Uh,
first, Luis.
no, for me it's easier. Gabriel is the like our digital influence here. So people who want to reach me out, please find me on Instagram. My name over there is Luis Gustavo P Santos, and have like a Kaya that's the certified the charter. I am a Kaya charter holder, and so that's my name over there. Please reach me out over there. It would be a pleasure to talk to someone who wants to know our work better, to know more about what we do here. And Gabriel will now give you all your social media for guys over here, please.
No, I just want to say that now I'm an orphan about the X, the Twitter, because we do not have those anymore in Brazil,
Oh,
and
it's
I'm
okay.
really sad.
You send your post to your friend in Portugal and they post it for you, right?
Yeah,
You don't use
exactly.
X. You have a guy, you have a freelancer
Yeah,
outside of
yeah, yeah,
Brazil
yeah.
that does it, of
Yeah, for
course.
sure, for sure. They just know. They just know what I'm doing right now.
Well,
So
you're a great follow on Twitter, and I'm gonna link your profile because people should still follow you because if you ever do come back to the platform.
yeah, yeah, for sure, for sure. But everyone can reach me. My name is kind of different. So Gabriel Boente and Twitter, now X, LinkedIn, and Instagram too. And just follow us. And we are doing a really nice job here in Options Co. Option Research, to be more exactly. So we are hoping to see everyone here and make more knowledge, make create more knowledge with everyone. And we are all here to come here again. Yeah, Patrick, we have a lot of
Yeah,
things to talk about.
like
Yeah,
we
we're
said
gonna.
in the previous part of the conversation, our one of our main goals here is really to demystify the derivatives market here in Brazil.
Yeah,
So anyone
like I
who
said, we'll catch up again for another episode in a few months, and we'll talk about the Brazilians option market because I don't know anyone. I don't know anyone that's covered that in English ever. So I'd be curious.
Yeah.
So
would
we'll
be
definitely
glad.
catch up, and we'll do it again sometime soon. But thanks, guys. This was a pleasure.
Thank you, Patrick.
Thanks,
See you, man.
Patrick.
Bye bye.